final hour session here. It's about 3:20 p.m. Eastern time. Fed day, FOMC day, market giving us a lot of noise. We've had about a 1.1% choppy swing. We're right back where we started the day. For the most part, we opened up around 66.04 and live price is around 65.98. Then about 5 or 6 points of the open today. Here's what I'm seeing. Everything's kind of sticky around 65.90. We have intraday highs at 66.25, which is right back to test the highs from yesterday. We had lows all the way down to 65.51. Look at our ATR levels, my daily profit play. These are the areas that we were watching. We took it this morning. Should have been really easy for profit today. What happened to my drawing tool? Should have been really easy for profit, given the fact that price didn't do anything all morning. And we had a feeling it's going to be like a very sticky implied volatility, which it was. Market starts to rally, market starts to fall. We had some small profits lined up. We came all the way down to test our put level. This is around the 15 to 20 delta for the day. Tested it, came right back up. We're sitting right back where we started. So good profit overall. We end up grabbing about 40 cents on the dollar. This trade is now for 20 cents. So, if we took the trade for $1.50, it's showing, 20, 25 cents debit. So most of the credit surviving the FOMC. Overall, pretty good day. Market makers did their job. Like I said here in the thumbnail, let me bring this back up. Fed noise. Okay, Fed noise, but watch for breakout. This is what I mean. Take a look at your price action today. So can everybody see this? Can everybody see just a big indecision candle, right? Big indecision candle. Now, all I'm looking at is taking the high low of this candle. Okay, so right about there. And I went back to the high from yesterday. So let me get this down to that high there. There. So that high, there we go. Now, so candle high from the all-time high yesterday to today, breakout and follow through. Let's just take this measured move. This is what I'm watching for the rest of the week. Are we going to have some follow through on FOMC to the bullish side around 6,700 or to the bearish side back down to lows at 65.50, possibly breaking the lows back down to the 200, or not the 200, but the 21 period moving average and the 50-day moving average. The one thing I thought kind of stuck out, yes, Seth says you call the indecision candle. I know. I said that's one way I can see price action playing out, and I'm not surprised. This was a highly anticipated Fed rate decision. Market gave us a lot of noise. Market makers stepped in there. They defended the turf, right? Defended the lows, defended the highs. We have price literally sitting right in the middle. So if I had anybody in daily profit play today, if you're brave enough to ride it out through this far into the FOMC, you're sitting on, most of the profit. If you're closing out for 25 cents, that's $1.25 out of $1.50. You're making 83% on the day. That's pretty awesome. So I ended up grabbing about a 25 to 26% winner. But I still had to wait all day. It was kind of annoying that we had to deal with all this chop. That's not typically what we have to wait for. But I took my chances and was trying to be, pseudo confident that market makers will do their job. So a couple of key levels that I'm watching for the rest of the week. I'd like to see a price will stay less than. Let's go over here. So I want to see a price will stay less than 66.40 and less than 66.75 by Friday. SPX for Friday, I'd like to see a price will stay less than 40 and 75. And also on NVIDIA, which is at 170, we were down to about 168. It's again, very noisy. I'm looking to see if there's any follow through Thursday and Friday. If NVIDIA can come back down and retest this low, I know that's in a couple of days, but for my newsbreakers trade, we're down about 50% right now in the trade. Let me make an executive decision here. I could just let it go. I could just do nothing. Okay. Let's go NVIDIA. Newsbreakers. It was down about 47%. Now it's 58%. Most I can lose is 376. So another 150 bucks of risk on this trade. If it gets, I mean, I don't think we're going to 197. And the closest thing right now is to get price down to like 166 or 165. That would be what gets me break even or better on the trade by Friday. So I kind of need to set a chart alarm. Here's the chart alarm. Let's set this thing at like 165. Okay, let's go 165. 166 technically is break even. So I'll go 166. And this would be newsbreakers break even. See if there's some follow through. Okay, how'd you do there, Mark? 12 lots, 2 different trades, all winners right into the sunset. There you go, man. William said a wild ride on daily profit would have paid out. Yeah, and we expected it. We expected a wild ride, and we got it. All it was a bunch of noise. So look at the market so far. I mean, we're still positive for the week. This is going to be an interesting way to finish out the week because this is the line in the sand, whether or not this week finishes higher or lower. Okay, so where the market closed on Friday last week, right there, if we stay above that blue line, then we're in positive territory for the week. You can obviously see like right around the highs and lows today, it's kind of right in the middle. So, I mean, all FOMC really delivered was the rate cut that everyone expected at 90+% and a bunch of noise. So is there follow through? That's what I keep going back to here. If there is follow through, are we going to stretch towards 67 or are we going to give some back and break, 65.50 heading down towards 6,500? If we break 6,500, we're getting into negative gamma, possibly coming back to this 50-day moving average. Second half of September is usually not great. This is historically speaking. I just don't know. I mean, the market might not give a crap. It might go all the way to the end of the month and then roll over in October. I have no idea. So I said this in a couple of sessions here. I do have some near-term risk to the upside. I mean, I'm looking at calling some tops here for the second half of this month. I've got 6,700s and 6,750s and 60s and 75s. I mean, if we rip up to I guess I'm in trouble. At least in the near term, it's going to cost me a couple thousand bucks if I'm wrong. But if we rip up to like 6,800, I'm going to take some heat on some trades. I'm hoping that's not the case. I'm hoping that we kind of put in a bit of a top here. The market at least stalls or rolls over. As long as we're below 66.50, I'm okay. So, I mean, I'll know more on Friday, but I've got the risk. It's embraced. I don't want to lose, but price is going to do what it's going to do. I'm hoping that FOMC is just going to give us something for a follow through. It's also very possible that by the end of the week, nothing happens. Right? By the end of the week, if we're still trading inside of this FOMC candle, we might not have much of a follow through at all. But the crazy part is, even with today's FOMC, we're right back up to this is all-time highs. We tested all-time highs again today, just off a couple of points. This was 24.60, and this is 27.30. We're off within like $1 or 1 point. So I just think this is a crazy, crazy market. There's just buy everything, buy every dip. So 1.1+% swing on the day. High to low, about 1.1%. And whether or not there's noise, we'll find out. If it breaks below this blue line by Friday, that's a red candle for the week. If we poke all-time highs again, is it a fake out and then we reverse? Watching to see how price plays out based on just the FOMC candle. Okay, so I'm not going to read into much more of that. I mean, by Friday we figure out if we're at all-time highs or we're not. It's that simple. I'm hoping that we're not, based on some of the trades I have this next like Friday and these next couple weeks out for expirations. Nimmer, what's up, dude? View on gold. I'm buying gold. XAUSD, I did some dollar cost averaging today. I think gold is going to drop. I hope that it does. I think there's a fake out trade on the dollar index. So dollar is also doing what I expected it to do, which is test the low, maybe test the lows, knock out these stop losses, and then start to reverse. I think if the dollar goes up from here, I would expect gold to drop. Even if it's a minor pullback, pulling back to this 21 period, 50-day, 100, 144, 200, I don't mind. Okay, I don't mind buying pretty much every dip on my moving averages for gold. But the question is, we gotta see it pull back first. Otherwise, I'm keeping the gold exposure. I'm riding gold into the sunset. I think that we have gold going higher. I wouldn't even set a profit target at 4,000 an ounce. I think literally gold could be this raging bull market, and it would be laughable to think like, hey, remember when gold broke out above 2,000? Well, we could be saying this at 2, 3, 4, 5 years from now when gold's at $10,000 an ounce. Who the heck knows? So I think gold exposure is good to have. It's not about a projected top. It's not about a projected. I have no idea. Like, we're at all time highs. I don't know what to think. I know there's a pullback that should be happening to find this 200 moving average, but that's about it. So if we get a pullback sooner than later, I mean, I just like to scoop up every dip I get on gold and just plan on this being a part of my portfolio allocation. Okay. For the NVIDIA trade, you just sell the 170 put, let the other three. What? No, for that newsbreakers trade, I'm just going to take the whole thing off as profit or loss. So we'll assess. I mean, if we're out of the money on all the spreads, and we'll see. I mean, if it's in the middle of the strikes, then there's nothing we have to do to manage it. If we're in the money on one of the strikes, we just take the trade in. It was a 4-leg trade for a debit spread, combo debit spread, and if it closed out for, I think my max risk is 376. So, yeah, I mean, I don't really have to do anything other than manage it by Friday. Okay. Yeah. So I like the pullbacks on gold. I like the pullbacks on silver. In fact, I'm going to do that right now. I'm going to figure out some quick allocations here. So at the very least, I think for a lot of my portfolio accounts, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm gonna these two are a little bit smaller. These are smaller IRAs, so I'm gonna keep those cash parts running. 1, 2, 3, 4, 5. So I'm gonna look at between gold, probably $1,000 per level, and silver, probably $2,000 per level. And I'm gonna write those numbers down. So I have, let's go another. I already issued this alert earlier. So gold levels, I'm looking at 320, 310, 300, 290, 260 on GLD. Okay. So basically, I mean, if you did $1,000, so $1,000 divided by 320, I can buy, so $1,000 divided by 320, I can buy just over 3 shares. So if I go 3 shares, 3 shares, 4 shares, 4 shares, 4 shares, or just 4 shares across the board, I'm going to put in some average. So this is a lot of trades. If I put in 1, 2, 3, 4, 5, 1, 2, 3, 4, that is 9 trades between GLD and SLV, looking at dollar cost average in. But got to start somewhere. So I'll put this in. This will be GLD. And this is going to be kind of a pain in the butt to do, but GLD for not 100 shares, I'm just going to keep it really simple at like between all those levels, it'd be a $9,000 allocation. That's just a tiny little sliver, but I already have exposure on SLV. I already have exposure on GLD. So these are just add-in positions that I want. Right. So I'm going to do 3 shares. I'll do 4 shares. I'm putting my levels here. So 320. Okay. So that would be 1280. So 320 there. And then another 4 shares at 310. Okay. And then another 4 shares at 300. All right, this will make it a little bit easier. So if you want to take these, I'm thinking of throwing these in. This is not really a, I can put this in for my project options edge, at least get these dollar cost average levels in. So 320, 310, 300, and then 290 and 260. So 290. And a 260. Okay, make sure these are all pending 4, 4, 4, 4. So about a 1280 allocation for each one. And that's 1, 2, 3, 4, 5 positions. There, 1, 2, 3, 4, 5 at 1280. So about $6,400 in gold. And then I will do SLV. This one I can allocate a little bit more. Underlines at 37. I'm looking at a 36. So 36. Let's go 1,000 divided by 36. So 27 shares. So SLV, 27 shares at 36. And then at 34, 29 shares. And 32, 31 shares. And 28.50. Uh, 35 shares. All right, so 36, 34, 32, and 28.50 for $1,000 allocation. And I'm just going to copy and paste that for all these accounts. So I'll do that. I can do that after hours. Get those in. Okay, so I'll add that to the to-do. GLD, SLV, dollar cost averaging. All right, gold, silver taking a bit of a deeper pullback. Bitcoin is at 115. Still pretty choppy. Are we making fresh highs in Bitcoin? Yet to be seen. What else? MicroStrategy just hanging out around this 200 moving average. Coinbase, noise, Ethereum up to these recent highs. Not all-time highs yet. I think all-time highs are actually, I guess we did poke all-time highs, but recent highs at 49.60. So about 49.60 to get back to all-time highs. Copper. I think if copper can trough out here, it's a pretty good trade. I kind of like, maybe I'll set a chart alarm here at the lows and see if I can do like a 1-1-1-1 trade down here towards these Liberation Day lows. 4.37. Set a chart alarm here. 4.38. Yeah, so if we hit that chart alarm low, I'm looking for a bottom here. I'll probably put a kind of a fancy put condor down here towards the 4.03 Liberation Day lows. See if that'll hold. What's your opinion of the Powell speech today? I took a screenshot of maybe the one thing that mattered. So when the market was falling today, if I zoom in here, I can no longer say the labor market is solid. And the market was actually dropping to hit that kind of 1+% drop from high to low today. Market obviously bounced back hard, but that was for a moment. I'm like, well, if the market's going to lean on one thing to the downside, that's a pretty big statement, right? But he proceeded to kind of backpedal into other things, and I mean, it's ultimately the market just kind of played around with everything. Market didn't do anything today. Even though it's crazy high volatility, the market didn't do anything. We have highs right here. Maybe it matters. We watch for a potential follow through, which I don't know if we're going to get much. It might be more indecision, right? I mean, we have like a $1.1 trillion expiration on Friday, and you'd think it would matter, but does it matter afterwards instead of during, right? Like what happens this week if all of a sudden the markets are right here and all those hedges expire? I mean, I don't know if it's just keep buying the dip and keep this melt up going, or if something actually rolls over to the downside. So no, it's not neutral. I mean, it's highly anticipated. There was nothing that Powell could have said today that would have really rattled the markets. I mean, the guy has been put under so much pressure, backed into a corner. Whether the Fed is right or wrong, they're cutting rates. I mean, it's been argued that they've just been late. They were too late to raise or too late to cut, and they cut last year and then paused. Now they're back to the cutting cycle after pushing it 9 months down the road. I mean, remember that. Like, this market saw rate cuts last September, from September to December, cut 100 basis points and then stopped. And then we waited 9 months before we get another cut, while every other central bank around the world's been cutting. Look at your central bank rates. Okay. So Argentina cut. Australia has cut since August. Canada has been cutting all year. China has been cutting. Eurozone has been cutting. I mean, all these major banks have been cutting. Japan is the only one that's up to 50 basis points, but that's from negative interest rates for the last decade. Mexico is cutting. New Zealand is cutting. Okay, Switzerland has cut to zero. They're back to 0%. United Kingdom has cut. USA finally cut today. So now we're at 4.25. I mean, they got a lot of free mileage out of telling the world we're going to cut rates. And the whole world moved on it, and every other central bank's been cutting rates along the way. So, I mean, now we see if it's all priced in, this is buy the rumor, sell the news, or we see maybe this is what the market needed to kind of spur along some more growth. Trying to basically avoid a recession, avoid a labor market slowdown, blah, blah, blah. Are they going to constantly thread the needle? I have no idea. But it's not neutral. It's the same thing that we knew this was going to happen. We knew that, I mean, the Fed rate decision, the Fed watch tool is up to like 90+% probability. We knew there was going to be a cut today. So what Powell said is exactly what he should have said. It's a dual mandate. He kept mentioning 2% inflation. He said that the tariff stuff is kind of a one-off price increase. Inflation still persists higher. The same thing he's been talking about for the last year. So nothing new. I'll say that, nothing new. But I thought for a moment, when the market was down, 1% today, and I read this headline, I can no longer say the labor market is solid. I thought, ooh, that's an interesting point the market might run with. But it didn't. It didn't run any further than, down to the lows and down to some of the option levels that we called out this morning. And it's right back in the middle. And here we are looking at a big fat indecision candle for the day. So what matters now is what's next. What matters now is what happens after this. Do we break and go higher? Do we break and go lower? Do we stay in the middle? I don't know. But we have until Friday to figure out. Like, maybe this $1.1 trillion operation, like options expiration, is going to matter to some degree. Maybe it doesn't. Okay. All right. Joy says, close the 55 cents on the daily profit play, adjusted a bit. Maybe it could have went lower and held all day. It's a winner. That's a great winner, Joy. Did you get filled for $1.50? That's a great winner. That's a great winner. And no, you shouldn't. I mean, because of FOMC, it made you wait a lot longer, but you should have not had to wait all day. Like, I mean, unfortunately, we said it this morning. It was going to be a sticky FOMC. I posted this in Telegram. This would be here. Okay, so daily profit update at 111. Today's daily profit showing a small loss. We're near FOMC at 2 p.m. There's 3 ways to play it. Accept the result. Small win, small loss prior to 2 p.m. I would have been down about $15 had I done that. So if I took the loss, I'd take like a $10, $15 loss, no big deal. Or try for the volatility crush right after 2 p.m., which I was in a live session for that. We had traders that closed out for the $1.50 down to $1.30, $1.25. That's about as good as it got. And then it went a little bit riskier. So I was down about $80 to $90 on the trade. And then, like I say here, embrace the risk for the day, see if the markets do their job, and, take some profit. So I ended up closing mine for $1.10. Right now it's showing, basically it's full profit. You're trading for probably 20 cents, 15 cents or something like that. So all in all, it's a good trade. The market makers did their job, and they stayed inside the levels that we needed. Right? Okay, good stuff. Fake down? I think so. I think this DXY is a fake out. I would not be selling the DXY right now. I think if the market's going to have any move towards risk off in equities, I think the dollar catches a bit of a bid. This is enough to kind of run the stop losses here at these lows. And, and this is just kind of price action / manipulation, some wave pattern. All it would be, it'd be something like this. We have a slide down here. Let me change this a little bit thicker. So here. All right. So we have this big slide to the downside. If this is a flat pattern, market pulls back into this area. Okay. This is where I want to look at scaling in to sell my dollar to fresh lows. Okay. Not the retest of the low. I don't think this thing is going to go sustainably lower without having a pullback. So I'm hoping that this low is a pop up. And if we see the dollar catch a bid, dollar getting a bid is probably a risk off trade. So I think that puts some pressure on equities for the next. I mean, if it takes a week for price to push up on the dollar, I think that's equities down for a week for the first time in a while, after being up to all-time highs and melting up for, the NASDAQ's had 9 straight winning days. Look at the Qs. Okay, this is finally like a streak that's breaking. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and we finally broke that streak with not closing at higher highs. So anyway, it is what it is. Barely broke the low. I know, but it's just enough to poke the lows. Because unfortunately, you get a lot of traders out there that are, selling the DXY with swing trades, and it's right here at the lows, and their stop losses are sitting right at this level. So what does price do? Runs that stop loss, runs that liquidity, and then let's see if it reverses. So let's find out. If I'm right, then we see dollar index catch a bid, maybe get some more bullishness to break above 97.50, maybe 9,800. If we're up above 98, I think we put in a bit of a bottom. We slowly work our way up into 100 plus. What does that do to the bond market? Keep an eye on bonds. I thought this was a pretty unique run in bonds. I didn't trust this run in bonds. So I did close out my positions in TLT. I had some diagonal spreads that was 65 by 89. That would give me a max profit of $24. I closed it out for $23.10. So I took most of the profit on TLT that I wanted. Ended up being about, I think, like $15,000. So I'm taking that, allocating it elsewhere. But essentially, those are the profits I'm adding in towards like gold and silver. I'd rather put my positions in gold and silver than bonds. So this whole idea of stable coins and the Genius Act, I think it's a way for the U.S. government to basically get a synthetic bond buy. So it keeps money coming into U.S. Treasuries because you're going to synthetically fuel the bond market and fuel the Treasury market with things that nobody wants. But if you want crypto and stable coins and what's backed is U.S. government, it's going to be kind of a forced buyer. So it's an interesting kind of synthetic way to keep liquidity into the bond market and finance whatever we have. We have $37 trillion in debt, so that's a lot. But anyway, I don't want TLT in the portfolio, so I got rid of it. I want more GLD and I want more SLV. But yeah, let's see what happens with the dollar. Okay, if the dollar is a fake out at the low, see if we get a bid. See if SPX is a indecision candle that gives us some follow through. Friday's major expiration. Okay, are we sideways through Friday? Are we up a little bit higher, lower? If there's any hedges, I would think that hedges would have to at least keep some type of suppression here at these like 66.20 highs, I would think. We'll find out tomorrow. What's interesting is now looking at this from a daily profit play standpoint. We've had 1, 2, 3, 4, 5, 6, 7 out of 8 days that have been almost nowhere. I'm not sure what tomorrow brings, but tomorrow's Thursday. My daily profit play members in the morning will probably look at a reverse iron condor and see if we get some direction for the day. I don't know. I'm hopeful. Hopefully get some direction because this is a whole lot of nothing. So either a reverse iron condor for tomorrow or Friday, getting some type of follow through. Does the market roll over? There's not that much time left in trading. We only have another week and 2 days. So once we get through Friday, we have a week and 2 days to wrap up the month and the quarter. And usually the back half of September is not a good month. So time will tell, right? But hitting fresh highs for the year, back up. This has been a pretty big P&L swing today. My day P&L was up to about 28K. Now it's 20.5. Highs around 570. I'm still at 568, 569. So yeah, it was up into 575, 576 today. Now it's 568, but fresh year-to-date highs again. That's not a bad thing. And I'll put on some of those SLV and GLD trades after hours. I've got a Newsbreakers masterclass coming up in 10 minutes. So if you're in my Newsbreakers service, I'm doing a masterclass in the next 10 minutes. coming in. Let's do some scans. Let's try to find some trades for Friday or next week, see what's on the list. Stocks I'm looking at for today, it is General Mills, Cracker Barrel, and FedEx. We'll take a look at those and price them out, and then look at a few for next week. If I find something I like, I'll take the trade. Is it possible we just sit here at 66? Yeah, it definitely is possible, right? I mean, it might be just a major pivot at 66, and we don't go higher, don't go lower. And if we look at this, I'm telling you, like, this is price action 101. With a big news event, a big indecision candle, price could sit here, not go any higher than 66.25, not go any lower than 65.50, and we just stay here for the couple of days. I need price for a couple of my trades in the near term. I need price to stay below 66.40. If we're below 66.40, great. If we're below 66.40 by this week or going into the end of the month, even better. Because I've got some loaded trades up here that are probably worth a couple $1,000. So I will, in fact, I'll tell you. I know for SPX, that's a bullish trade. This one is, I need it below 67.50 for $105. So I'll add this up. So 105. Okay, so 105 and 66.40 for Friday. That's another $1. Okay, this one's for October, another $1.10. It's not right. So 110, So 105, $1, 110. Okay. This one, $1.20. This one, $1. This one for $2.30. And this one for $1. Okay. So potentially $865 of profit as long as we respect some of these levels. So as Joey's asking, if we stay here, 6,600 or sideways or lower, that's $865 of profit that I've got up for grabs as long as we stay here. I don't want to see price go higher. I'd like to see the back half of September be a little bit rocky, maybe a little bit more volatile, maybe a bit of a dip. Just give us a dip. I'm happy to buy the dip. That's what's funny. I want to buy the dip. But the market's like, we're not going to give anybody the chance to buy the dip. That's really frustrating. So what that would mean to me is if I'm wrong and I lose in September and the market doesn't roll over in October, I feel like we're going to have a nasty, nasty December, January. But if we roll over September, October, get it out of the way, and we can still position for a strong Q4 to get back to the highs and then proceed, higher in 2026. Why does September normally have higher volatility than other months? A lot of it is because what comes out of summer trading. Summer trading is a bit of a lull through June, July, and August. September, kids are back in school, everyone's back at the trading desk, more volatility. There's a lot of tax loss harvesting in September, which is you dump your crappy positions. So if you're sitting on losses, what's kind of happened is the first half of the year, what's gaining will likely maintain momentum. What's losing is unlikely going to turn around. So you just kind of let bygones be bygones, and just let losses be losses, and eat the losses, and toss it into the CPA, and say, look, I'm gonna take these losses and offset these against my gains. So a lot of that happens in September. So a lot of it's just it's a slow volume summer, and then we come out September with kind of the first real real volume and real volatility right after summer trading. And a lot of it's just cleansing the portfolio, reallocating, for better for worse, and just going in to kind of finish the year strong. Okay, all right, we're right at 65.98. Let me see if I have any other working orders today. This is broken wing call. Are these butterflies? This one didn't fill yet. Okay, this is for today. I can cancel this trade now. This one is pending for. This trade's good at any time. This was offering like 90 cents this morning. Now it's offering 45. I will maybe revisit this one tomorrow. Okay, I'm going to cancel the trade for right now. I'll revisit that one for tomorrow. All right, so on the day, how did everybody do for FOMC today? Daily profit play was a winner. That was good. Took a winner on waterfall income. IWM closed out for a nice winner. We had a like 220 debit close out for a 330 credit. So grabbed like a 30+% winner there. That was automatic. That broker or my broker automatically closed me out there. For the day, tail of the tape is S&P flat, SPY 0.02, SPX 0.1, futures flat. Just a noisy, crazy, choppy day. NASDAQ down a little bit. Q's down 0.13. Dow at 0.6. We had all-time highs again on the Dow. Spiked above them, but did not close above them. Interesting. Okay. Russell is at 0.35. Almost. Wow, look at that. Almost hit all-time highs today on the Russell. Almost. Okay, FX pair, sure. Let's go currency strength for a moment. I know the dollar took a big nosedive this morning, but it's probably back to center. Yep, look at this thing. So the dollar, we dumped all the way down to the weakest of the day, and then we came all the way back up to where we started. So a very noisy dollar day today. Again, look at the vertical axis, not a ton of direction. High of 35, low of 30. That's just noise. So very, very choppy, very crazy after 2 p.m. Question now is, do we have follow through? Okay, if you set the trade with me, Joy, you should have automatically closed it out. I'll put that trade in here right now. Fixed trade modal should be like contrast bug. Okay, good. Sending this to Deanna for waterfall income. All right, so this was trade number 100. Trade number 100, IWM, entry 229 debit, close 3.30 credit, broker closed for profit today. So if you set that trade along with me, we should automatically had that 330 credit set. So that was a nice little return, 44.1% return on risk. Not too shabby. Okay, then we got some other trades to keep an eye on. Okay, currencies. Let's have a look. When did that close? My broker closed me out during FOMC. So during all that noise, FOMC, right here, there's my 330. So it looks like I got filled. So right now it's offering about 325. So if you wanted to sit and wait, you can just set it at 330 and let the broker still try to hit that mid price, or you can get out at 325 and take a little bit off. But I had this trade set up where we took the trade. This is a waterfall income trade, so we had the take profit set, and the broker closed me out today at 330. So it's right there again at 325, 326, 327. So you're only shaving off a couple dollars if you want to get out of the trade with me. Yep. Very good. Okay. Yeah, trade number 100. Yep, exactly. Yeah, we still have some trades running on IWM for profit. That is so far still. I think we have one more trade running for waterfall. IWM. Yep. So this is the one that closed out today. 229 closed out for 330. This one is a 281. I've got to take profit set at 381. Trading at 330 right now. So both are looking pretty good. I need price to stay above 225 or 238. So we stay up there. We should be looking good. 335 September to good. Nice closeout. Nice work, Joy. Good. Okay. I think that's going to wrap it up. So closing bell coming in just a minute. 65.95 for the day. Right inside my daily profit play range. I'd like to see a pricing stay below 66.40 by Friday. That would be lovely. Is the market going to have what it takes to get to all-time highs again tomorrow and or Friday? I'm hoping that's a big fat no with all capital letters and exclamation points, because if we're getting all-time highs again, I feel like this market has no interest in hedges at all. I mean, the scary part is the downside is if we break lows, I don't know if we flip into a negative gamma environment. But negative gamma usually means higher volatility and more downside. So 65.98 plus or minus on the day was 44 to 45 points. We ended up doing way less than that. I mean, this market looks like we're settled at 6,600 and we opened at 6,609. So brilliant job by market makers just to keep it very, very tight today. That's now several days in a row. This was Thursday last week, but Friday, Monday, Tuesday, even with today's volatility, a very choppy opening to close. And I am as curious as everyone else, like, what does it mean for Thursday? What's it mean for Friday? Well, we'll trade it tomorrow and find out. Okay. Screwed up on entry 109. Have to figure out how to get the trap. So what'd you do on that, Joy? Did you still have are you still in it? Did you close out one side of the trade? That is a bear put spread along with a bull put spread. So if you need to send me an email, chrispulverpub@gmail.com. Let me know if you want to take a look at your trade itself. You're talking about trade 109. I'm in there for 70 cents. I'm still in the trade. So as long as price stays above 55.10, we're fine. Okay, not sure. All right. If you want to send me a screenshot, Joy, do it. Give me a screenshot of your broker platform, or send me the legs you're in. But I'll try to do my best to assess if it's you're in for a debit or you should be in for a credit. We took the trade with a credit of 70 cents. You're trying to get out of it. Okay. Well, I'll show you what it's trading for. It's probably not in profit, or if it is, it's going to be small. That is December 31st. This one. Okay. So right now it's only up about $5. So if you want to close that trade, I mean, you can close it out for 65 cents debit and take a $5 winner. Chris Pulver Pub at gmail.com. So you're looking at the trade right here. I'm at 70 cents credit. It's showing $10 profit. If I want to close it, I try to close it at 60 cents debit, 65 cents debit. Just get out of the trade if you're not liking it. And I'm still in the trade. I'm liking it. I'm going to hang on to it. There is a 96% chance profit on the trade. So I'll stick with the probabilities. Okay, I'll let you go. I'm going to switch gears here to Newsbreakers. If you're in my Newsbreakers course, hop in live. I'll send the link in the chat. That's going to be a Zoom link for class. Okay, and then tomorrow morning, 9 a.m. Eastern time, back at it again. Daily profit play, daily profit plan. Everyone is welcome. All traders can come in and join me. If you want the alerts and the live trades, then you have to be a member of my daily profit play alert service. But this session is free every day, 9 a.m. Eastern time. I'll post my Telegram here if you want to join in my Telegram. So Telegram here. Chris Pulver Telegram. There we go. And if you want to join me for the daily room, here's the daily profit plan. There we go. Okay, so the daily profit plan room, just to join me for the weekdays, is free. If you want the alerts, the trades that I take in my live accounts, then you pay for that membership. Right? Tomorrow is Trending Thursday, so far there's been 0 trends for the S&P. The market has literally gone nowhere. So we'll see if there's more of that to finish out Thursday, or if there's something like a breakout. I'm telling you, just watch this candle. This is a big fat indecision candle for the day. As Seth said earlier, I did call this. This is what I've seen very commonly for FOMC. A big fat indecision candle, which means if price can go nowhere, it's just inside candle trading. If price goes higher, does it break out and close higher, or does it fake out? If price goes lower, does it break out and close? If we break out lower, measure this to 64.74. That's an easy 100% breakout move. If we go to the upside, do we get to 67.05? This is all based on the FOMC projection. Okay, so tomorrow's another day. I'll see you then. All right, thanks, everybody. Newsbreakers, let's jump into class here. Just give me a couple minutes. I'm going to grab a beverage refill and we'll be live for the next hour.